Good morning. My name is Richard Ponte, and I'm the Director of Events and Programs for the Maine State Chamber of Commerce. On behalf of the entire team here, it is my pleasure to welcome you to 132nd Legislative Wrap-Up, the latest in our webinar series. Thank you for joining. Before we get going, there are just a few things we'd like to share with you about today's session. All participants are in listen-only mode. Please submit questions using the Q&A function. Time permitting, we will answer them by the end of the session. We will also use the Q&A feature to share useful links and other materials. We have enabled closed captioning in English. You can access this feature by toggling it on the taskbar at the bottom of your screen. This meeting is being recorded, and we will make the recording available to you on our website in the next few days. And finally, if you lose your connection, please use the same Zoom link to reconnect. We would now like to begin by thanking our sponsors. Our 2026 webinar series sponsors are AARP, Central Maine Power Company, Kennebec Savings Bank, eBank, Next Era Energy Resources, and Northeast Delta Dental. It is now my pleasure to introduce the President and CEO of the Maine State Chamber of Commerce, Patrick Woodcock. Patrick will be moderating the conversation today. Good morning, Patrick.
Well, good morning, and thank you to our sponsors. Thank you for our partners in making this webinar possible. You've heard the headlines about activity in the legislature. It's time to get into the details and behind the scenes of really what are the implications for the state's economy? What are the implications for your business? It was an active legislative session. It's not quite over. Tomorrow is what's referred to as veto day, where the legislature will have one more day to discuss and consider some of Governor Mills' vetoes. We have a chock full agenda for us, as it was one of the more consequential legislatures. Really, though, set the context. We wanted to begin with our state's economy. I have to say, in reflecting on where we are and reviewing the latest macroeconomic data, the state's economy is fragile. We saw the last fourth quarter numbers come in, where in aggregate for 2025, the state's economy grew the fourth slowest in the country. There are some bright spots, but to really establish the outlook for the economy and context for these public policy discussions, we're so pleased to have Commissioner Michael Duguay, who is joining us today from the road. Thank you so much for joining us, Commissioner. I'll just begin by applauding your leadership and Governor Mills in vetoing the data privacy, the data moratorium legislation that occurred on Friday. These data centers, for what was proposed in J, as I told you earlier this morning, anytime you're moving shovels in rural Maine right now is a good day for that community. And thank you for listening to the community of J and those who will have a few hours of wages as a result of that veto. Commissioner, can you give a little context of how you see the state's economy and how important public policy is right now?
Yeah, thank you, Patrick, for that context as well about the data center moratorium, because I think it's a backdrop really of what we've experienced this past legislative session. There really is a lot of activity that wants to occur here in Maine. I think the reality on the ground is how ready are we for that sort of transition into a different economy in some cases, but also to a higher degree, a doubling down of things that we already do have here in the state. And I want to talk real quickly about that. There are some national things that have been a little bit of a challenge. We understand tariffs and some supply chain issues that have been impacted by that. Our hope is that we see ourselves going into the summer. Much of that with companies that I'm working with every day are starting to see that abate a little bit. So I'm hoping that the price issues will come down and those tariffs will not have the same impact as it had perhaps this past year. And I think that's also data, Patrick, that we're looking at, you as well, that suggests that there's a little bit of a challenge in the economy. We're hoping that at the federal level and nationally that will actually mitigate a bit. On the ground here in Maine, though, the interesting thing that I'm seeing is that when you look at where we are either doing really well or doing exceedingly well are in those industries. No surprise to people here on the call, is where Maine has an advantage. And I think looking into the next administration, my hope is that they would look to see a lot of the good work that actually the 132nd did do, and really put some more chips in those areas. And let's talk a little bit about that. So Blue Ocean Economy had a great work task force and a working group supported by the legislature. That actual bill and initiative has been supported. We'll continue, I think, as a state to go forward, looking at that as an advantage to the entire state. But also, it's broad, right? It's maritimes, it's marine, it's military, it's research. It has a lot of impact through a lot of the parts of Maine here that are really important to us. Agriculture, interestingly enough, the Business Incentives Program has seen probably as much, if not more, activity in agricultural investment in that last year that it was in place, since January of 25, than we've probably seen in agriculture in this state in the last decade. What that suggests, however, it's not necessarily everyone doing well. It's the companies that have really invested in their own technology. They are using, in fact, artificial intelligence. They are using new tools to monitor crops and basically growth patterns and the like. Those that will continue to use that technology, Patrick, are going to do really well here in Maine. I am worried, however, of the ones that have not embraced that yet. Those are the ones, unfortunately, I think are going to be challenged going forward and probably not be able to make the investment. We still know a few things we have to deal with. Housing, we hear from almost every community. And what's interesting to me, and I think it's really important for people to hear, it's not just a southern Maine or a coastal Maine problem. It is a problem in central Maine, in Aroostook, in rural communities as well as any. So the interesting thing here, I think, going forward is with the legislature is to support those mechanisms and tools that we may be able to have to try to get more units out there. With the Oversight Committee, Housing and Economic Development, and the full legislature, they supported the Innovation Production Housing Task Force to look at the obstacles that maybe the state was providing as it relates to either difficult licensing or problematic processes of getting either pre-manufactured or panelized housing components onto the market, double taxation, and a few other things like that that normally plagued us. There's still some work to do. Any legislators on the call, they would recognize there's still some work to do there, but we have really an opportunity to take a tree out of our forest and turn it into a value added housing product here in Maine for not only the domestic market, right, but also for export. We're working with other countries that are excited about those opportunities. We're hoping as we go forward through MITSI, Maine International Trade Center, we'll be able to have some deals at some point going forward. We do have to double down here, figure out how we move resources to that industry, whether it be CLT, engineered panels, and the like. But great opportunity there. I'm seeing a lot of fantastic opportunity. Here's the things I'm going to throw up with a couple of challenges, Patrick, and I'll turn it over to the group. The one thing I deal with every day, not unlike everyone here on the call, is companies that are really concerned about energy. And obviously, Patrick, you know this probably better than all of us because this was your world. Energy is still a big issue. We have to get our hands around it here in Maine to figure out what the best paths are. We do have a state energy plan. The hope actually is to look at these verticals. Where might Maine have the opportunity to basically use domestic, I think, resources here? Is that in the fiber world? Is that biofuels? Is that in biomass? I think that's a yes. It might not solve all of our problems, but boy, it would put, I think, our forest products back to work. And a lot of those loggers who have been somewhat idle because of the lack of production in some of our mills, kind of back out there and get them back to work. So there are opportunities. As people know, there are a couple of companies in the biofuels world that have publicly been making progress here in Maine. The hope is in 18 months to 24 months, there might be one of those facilities actually sited and developed. The last piece, and then I'll stop right here, Patrick, is We somehow have to figure out access to capital for Maine businesses. We do an exceedingly good job of getting companies from $1 to 15 million in their sort of startup and sort of nascent stage. We don't do a good job from 15 million up to 75 million. And I'm really worried going forward into that next administration. What we don't want to be is the region's best incubation program for businesses. We've done a great job through MTI, Maine Venture Fund, through FAME. But unfortunately, when we hit about a $15 million raise or $15 million capitalization, we stall. And unfortunately, other states are there and willing to then put those other dollars in to scale those good Maine companies up. So we really have to be protective. We've done a great job, I think, in the 132nd of really, in effect, looking at business in a broader perspective. We know what we can be, what we can excel at. The issue here now, though, is can we protect what we've actually started? And I'm more concerned, I think, Patrick, on that, because when you look at things happening nationally, our precision manufacturing companies are doing very well. Those that are involved in either military or heavy construction or industrial products are also doing very well. The difference maker is they have capital that is coming from other sources and not in Maine. So I'll stop there, and hopefully I apologize for being scattered on it. There's just a lot that has happened in the last few
No, I think
months.
it's a clear-eyed view of the challenges right now. Energy, housing, workforce is something we hear consistently, and opportunities. Research and development, the United States economy has showed a resilience, and really whether we are part of that resilience or and address some of these challenges and seize these opportunities. I did want to turn now to reflections of really where decision making is being made in our state for priorities, and that's on the Appropriations Committee. And I did want to turn to Representative Jack Ducharme for a little context setting. Uh, Representative, when we started this session, it started looking like the supplemental budget would be a more consequential document than typical. Sometimes you're really trying to make revenues meet expenditures. But can you give a sense of your takeaways reflecting after a couple weeks away from the legislature on the budget, its outlook for the next legislature, and really what should businesses be caring about for our state's fiscal outlook?
Thank you for having me, Patrick, and thank you for the question. Um, Pretty broad questions there. I think that when we started the supplemental budget, um, of course, on appropriations, we have a sense of how much money there is there, and we were just beginning the budget when the governor had her State of the State address and announced what she was planning on doing. But the reality of the supplemental budget is this was one of the smallest supplemental budgets I've seen in my 3 terms in the legislature, and I think probably this is a harbinger of what's coming for us. Um, I'm really concerned with what I see in the revenue reports. I'm concerned that corporate income tax revenues are down and continue to be down. And when corporate income tax revenues are down, that means companies aren't making money. And if companies aren't making money, they're not going to reinvest in the state. And that's one of the struggles that I think that we have. Looking forward, the fact that we've likely, once all the final numbers are in, passed the Rubicon of $12 billion for a biennial budget versus, as some have said, $8.4 billion in 2018. It's a significant jump, and the way I always try to tell people to look at it is you can talk about an increase between 8.4 and 12 billion, kind of in these generalized terms, and while it's $4 billion, but when you start overlaying those normal things like normal increases in cost to do business, if you the difference between a 3% increase on 8.4 billion and $12 billion is significant. If nothing else happens and there's nothing new that we need to do as a state, just by simple 3% increases, the next biennial budget is going to approach $12.5 billion. You hear some of us talk about a structural gap. We think that structural gap is likely to be about $1 billion in the next biennium. And so looking at those things, coupled with the idea that we're seeing kind of an erosion of corporate income tax revenues, really kind of makes me a little nervous thinking about going into the next biennium and the possibility of doing a budget and figuring out how we're going to allocate the money. I think, quite frankly, I think what we need to do is we need to be way more transparent than we have been on what things are actually costing the taxpayers in Maine. And you could see that in what we did as the minority party in the legislative in the appropriations discussions. This year, we made sure that we did our quote negotiations, if you will, our discussions out on mic and on camera, so that the people in Maine could understand what went into the decisions that came from the majority relative to certain things. And I think it was pretty evident that that the minority supported a number of things that really were helpful to Maine people. Conversely, we opposed those things that we thought were going to have a negative effect in our quite frankly in our fiscal future. So I don't know if that answers your question. I have a trepidation about the next biennial budget. This supplemental, as I told my caucus, it's not a lot of money. $250 million is really in the state system is not a lot of money. We told our caucus right up front they probably wouldn't get anything they wanted, and that was pretty much true, other than some things that both sides of the aisle could support that we were fortunate enough to be able to push through. So I hope that answers your question or not.
Yeah. Representative Ducharme, we're going to jump into the details of the supplemental and implication for our state's economy and individual businesses. As we prepare for a biennial budget, what is the key point where you'll start to have confidence in revenue projections? Is that all the way into December, or will we get a snapshot in early fall of really where we're headed?
I think we'll see at the appropriations level, we get a monthly revenue, kind of a revenue report that tells us where things are and so forth. So I think at the appropriations level, we'll kind of have a sense of where we're going to be. But I think that the next real true look is going to come in the revenue forecast in December. I think that's going to be where we're going to see exactly what we're going to be looking at, exactly what the next administration is going to be looking at. And if these revenue erosions that we're seeing in certain areas are going to continue through. Because when you look at month over month, things change. 1 month, personal income tax is up. Next month, personal income tax is down. So you just kind of have to look at it over the long term. My concern with corporate is that it's been down for perhaps, I think, the last three revenue reports that I've gotten, and that doesn't sit well. So,
well, thank you, Representative. We did want to drill down from a forward projection to really what are the implications of the supplemental budget. And with that, I wanted to turn to Linda Caprera with our advocacy team. Linda.
Good morning, everyone. This year's supplemental budget, LD 2212, we feel was a big disappointment. Usually supplemental budgets are to make adjustments to the biennial budget. They're not for new policy initiatives, especially significant policy initiatives, which we saw in this supplemental. These policy initiatives, one of which were the $300 checks at a tune of $155 million that was used from the Budget Stabilization Fund. These types of initiatives are not sustainable. And the question you have to ask yourself, does this grow the economy? And the question is no. They went and spent the $155 million, but they took and they reduced programs like the Better program, things that promote investment here in the state. So that was very troubling. Again, I'd like to thank Representative Ducharme and Representative Crockett for voting against the budget this year. We were very disappointed to see that it passed the way it did. But again, it was supposed to make adjustments. And again, the question is, you have to ask yourself, is this moving the Maine economy forward? These types of initiatives that we find in this budget. And again, it's supposed to make adjustments, not major policy changes. With respect to tax conformity in the budget, Maine is a static state, which means it basically picks and chooses what it chooses to conform to for changes at the federal level, for income tax changes. It is not a rolling state. It doesn't automatically conform. So when we looked at tax conformity in this budget, there were a number of changes that were made. First of all, with the enactment at the federal level of the One Big Beautiful Bill, which is OB3, a lot of what was in OB3 was carried over from the Tax Cuts and Jobs Act, which was enacted back in 2017. And of these changes, there were some significant changes carried forward. One had to do with the R&D, research and development expensing. What they did here in Maine is they adopted immediate expensing for companies that were under $31 million in assets. So for smaller businesses, you can immediately deduct R&D expenses, which is huge because it puts money in your pockets to invest in your business in terms of jobs, in terms of investment, equipment. So it's very important that immediate expensing happen. For larger companies, though, it did not do this. For larger companies, it enacted add backs, which basically if a business deducts R&D on their federal return, a portion of that has to be added back to their Maine return. So it does not have the same impact as immediate expensing. They only partially conform to this, which is a huge problem for, again, investments. We urge the governor and the legislature to conform for all Maine businesses on R&D, and that did not happen. So that was significant. The other thing it did conform to is Section 179, which allows businesses to deduct the full cost of qualifying business equipment. This will impact or be huge for manufacturers, for contractors, and basically it increased the threshold from the current $1.5 to $2.5 million, which is significant. So it did adopt what they did at the federal level. But Maine usually wants to conform to federal changes overall, but it did not conform to all of them. The other one that it conformed to was the business interest deduction. This helps businesses with deduction of debt going forward. So that was significant. But a lot of the provisions that were adopted at the federal level, such as bonus depreciation and so forth, it did not conform to. And conformity really is important because it allows taxpayers and the state itself. It makes it easier for taxpayers because they just need to use one set of numbers on their federal and their state return. And it's easier for Maine Revenue Services, obviously, to administer the tax laws. So we like to see Maine conform, and it traditionally does, but it did not completely in this bill. And that was disappointing. Next slide, please, on the Better program. One of the things we saw this year was the proposal in LD 2212 right off the bat to eliminate the Better program, the Business Equipment Tax Reimbursement Program. This program has been on the books for 30 years. It is hugely important for Maine businesses. This program and its predecessor, Betty, Business Equipment Tax Exemption, these are two of the most important programs that we have here in Maine to attract investment. It eliminates the disincentive to investment with the high personal property taxes. And what it does is it dollar for dollar reimbursement for personal property taxes paid on equipment placed in service from April 1 of 95 to 2007. The legislature enacted this program to promote investment. Over the course of the years, it's attracted hundreds of millions of dollars. So when we saw this in the budget, it was like, what? We did at the Maine State Chamber of Commerce, we did a huge grassroots effort in 2 weeks to bring businesses, the unions, and everyone else down to the State House to oppose this wholeheartedly. I've never seen this in all my years that a governor would propose this, but she did, and it was very troubling. The legislature backed this out of the budget for only non-retail. For retail, and I will turn to Curtis in a minute to talk about that. But for non-retail, better remains intact. And this is about a total of about a $14 million program. So it was huge to businesses that the legislature maintained this, but the problem is they didn't maintain it for all businesses. So I'd like to turn to Curtis to make a few comments on the implications of this for retail, because again, it was so important that they maintained it for companies like manufacturing, but they didn't maintain it for all businesses. So that was troubling. So again, Curtis, I'm going to turn to you and make a few comments about that.
Yeah, thank you, Linda, and good morning, everybody. I'm Curtis Picard with the Retail Association of Maine. The Maine State Chamber of Commerce really did an excellent job on trying to navigate this very difficult issue. But Linda's absolutely correct. I mean, this I put squarely at the feet of the governor. This proposal was included in the supplemental budget to eliminate the Better program initially. And what ended up happening is that retail, to be blunt, got thrown under the bus. So retail is going to be removed from the business equipment tax reimbursement program, starting with 50% the first year and then 100% the second year. So as an industry, we are very disappointed. The justification for it was that retail is going to be here regardless, and it did not acknowledge the significant investments that retailers make in their equipment as well, whether it's point of sale system, refrigeration, if you're in the grocery industry. So a lot of prominent retailers are going to get a very big tax increase because of this change. And as Linda said, what we've seen in the past with different business tax incentives, when these do get discussed, either they get discussed as its own public policy issue, where we are always welcome to have, or there's some sort of alternative that a business could take advantage of. In this case, that doesn't happen. Retail is simply being removed from the Better program, and will have a multi-million-dollar tax increase because of it.
Yeah, and I just want to add, eliminating programs like this, especially in budgets, is not reasonable at all. There was no public hearing on this. And again, legislators on both sides of the aisle, to their credit, were like, what? The Better programs being eliminated? That was like the holy grail of business incentive programs. And so it was very troubling to see that it was automatically done. Again, we're glad that they backed it out. But again, for retail, that is a huge problem going forward. So, and again, when you have programs like that and you basically do something in interim and take away a benefit that you've given, and companies have invested based on that benefit, that doesn't look good for me. It really doesn't. So I'd like to turn to John Hadwen to talk a little bit about the pass-through entity tax and the other piece of the puzzle, which was the imposition of the 2% surtax on Maine individual businesses, small businesses, with the businesses have exceeding income of over $1 million. This is a huge problematic provision that was put in the budget. And I'd like to turn to John right now for him to discuss it and talk about the implications of this to Maine small businesses, which that's who's going to be impacted by this.
Thank you, Linda. Good morning, everyone. I'm John Hadwen. I'm a CPA and tax principal with Albin, Randall, and Bennett. And, the pass-through entity tax was a good win for Maine small businesses. This is something that has been worked on for 5 years, and, it was well-needed relief for Maine businesses, only to be kind of squashed by the 2% surtax on Maine individuals. But I'll go into, the pass-through entity tax first. That's kind of the good news. And this is an optional election that partnerships and S corps can make to pay Maine income tax at the entity level versus passing all the income through to the owners. The entity calculates the tax based off of its main source income and pays the tax directly to the state. In return, the individual owners of the business get a credit on their main personal returns for their share of tax. The benefit here is that this pass-through entity tax gets around the federal SALT limitation, which for most taxpayers is going to be $10,000. Yes, it did get a bump up, but to $40,000, but it that quickly gets phased out and it gets back to 10. So this is well needed, relief. And this is something that, you should be talking to your tax advisor about now. How can I plan? How can I take advantage of it? Maybe you're not a partnership or an S corporation. How can you restructure to take advantage of it and get this benefit? And you also want to talk to them about cash flow. How is this going to work when you're making estimated, tax payments? Because now you're switching from having you individually make these estimated payments to the state of Maine. Now the business is going to do it. The question, that Maine Revenue needs to kind of put out there is how soon can they get this pass-through entity tax implemented? When can businesses start making payments to the state for it? You just have to be, careful of making, double payments because you don't want to make it individually and at the business and have that money sit with Maine Revenue. So this is something you definitely want to be sitting down with your tax advisor in the next couple of weeks. A lot of them are on vacation, getting back. So sometime in May, reach out to them and have a conversation about this. Kind of the bad news is this 2%, surtax. And this applies to individual taxpayers, residents, non-residents, also applies to trusts and estates. So if you have, estates and trusts that are paying taxes, this applies to you as well. And this is an additional 2%, surcharge on Maine taxable income over $1 million for single taxpayers. You get an extra $500,000, so $1.5 million if you're a married filing joint taxpayer. So any income in excess of those thresholds. So for example, you're a single taxpayer, you make $1.2 million, only $200,000 is subject to this tax. Another key thing you want to point out here is Linda talked about all those adjustments about conformity. You have to factor those in as well. So you're not going to be able to reduce your taxable income for the pass-through entity tax. You're going to have to add that back. Bonus depreciation, you're going to have to add that back. If you're not a small business, you're going to have to add back your R&D cost, and you're going to be paying an extra 2% surtax on that as well. Most people think, the surtax maybe isn't going to apply to them, but you also have to plan ahead. Are you selling a business? Do you have stocks that you're selling? Do you have a large bonus compensation? So you're going to have to think about this now and plan ahead to work on, deferring income, accelerating deductions. What are mechanisms that you can do? If you're selling a business, can you, do an installment sale? If you're selling real estate, can you utilize like-kind exchanges to defer gain on it? So you're going to have to do a lot of planning, and it starts now. You can't wait until the end of the year to do planning. This is something that you're going to have to get ahead of the game. Think about if you're selling a business, does it make sense to change your residency to New Hampshire, Florida, or another, non-income tax bearing state? But this is one where you're going to have to work with your CPAs to get ahead and plan to, have a tax efficient strategy moving forward.
Yeah, I just want to add, this clearly impacts smaller businesses, and that's not what the legislators wanted to hear. They think it was just millionaires tax. It is completely a small business tax.
I agree completely because,
Yeah.
if you own an S corp, you own a partnership,
Right.
all of that income passes through to you on a K-1 onto your return. And, I have a fair number of clients that this impacts, and to me, they're not small. To me, they're not big, they're not medium. They're small taxpayers, and it's really going to cost them. And when you're looking at this in conjunction with the passive entity tax, there is a good benefit. But, I ran the numbers, and, if you're a single taxpayer, you lose all the tax benefits for the passive entity tax when your income hits around 3.4 million. If you're a married filing joint, the break-even point for the passive entity tax is 5 million. After that, there's no tax savings. It's all gone.
Well, this is going to have significant implications for individual businesses. The example of an owner selling a business is something that every business goes through when it's passed on from the generation, or with employee-owned businesses. So there are going to be applications to this that is broader than I think the initial perception of who this would be affected by. And we'll have to monitor this because we really do want all these individuals to incur this income as Maine residents. I mean, that's ultimately what we want for them to be spending money in the state, both for sales tax, but to capture as much income as possible. I did now want to turn to implications with the state's paid family medical leave and our labor committee. This was one of the more debated issues, and there are a lot of components to it with a lawsuit of how businesses can aggregate together to comply with the state's paid family medical leave requirements. With that, I wanted to turn to Amanda Johnson on the chamber staff. Amanda.
Good morning, everyone. Sorry, I was getting to the right slide. Thank you, Patrick. I just wanted to mention that this was a bill. It was a sad day when we lost this one. LD 2018 is an act to amend the requirements governing self-insurance plans in the paid family and medical leave benefits program. As we all know, the PFML started in 2023, and it provides 12 weeks of paid job protected leave. And basically there was 3 options people could choose from, people meaning employers. You could participate in the state-run plan, you could have a fully insured private plan, or implement a self-insured plan. So under this framework, there was very few requirements that were listed. So employers were required to provide benefits that were substantially equivalent to the state plan and to secure those benefits with a surety plan. So a group of employers decided to join together and pull some risk and start a group self-insured plan. When the department found out about this, Department of Labor, they decided that no, this was not permitted under the law, and introduced LD 2018 to restrict this. And what we would do is prohibit the pooling of risks, financial resources, and administrative functions among employers. And it applied those restrictions retroactively to April 1st, 2025. Why the retroactive? Because there was litigation brought against the Department of Labor in regards to being able to start this plan because there was no restrictions strictly listed into the statute. So what happened is during the public hearing, the chamber along with stakeholders emphasized that this issue was not a benefits level, it wasn't employee protections, it was rather cost efficiency. So businesses could save money, pass that money on to their employees through benefits and wages, bonuses, and it just helped minimize expenses. Throughout there, the speakers also raised concerns that the lack of explicit statutory language, which we discussed earlier, about prohibiting these arrangements was not in the statute. So what happened was some stakeholders got together with the Department of Labor, and there was an amendment created which still restricted the pooling of risk, but allowed some administrative limited cost sharing, such as expenses related to legal services, accounting, and third-party administrators. With this, it's still limited what employers could do. It still was really expensive. It wouldn't be a cost savings. So they came up with a minority report that would allow a little bit of a different approach. It would make sure that employers were fully responsible for their employees' benefits and paying claims. But this would have allowed employers to share certain costs, including legal, accounting, surety, and third-party administrative expenses. And unfortunately, the majority amendment was passed, and the minority did not make any headway. It didn't make any headway in the House or the Senate floor, even though it was brought up. It was a close vote in both the House and Senate. The first vote in the House was 73 to 72, with a couple of Democrats actually swapping from a vote of no to yes. So it would have actually killed the bill or moved to the minority bill. In the Senate, it went from 19 to 15 vote to pass. And then when it came back to the House, it passed 76 to 73. The governor did sign this into law on April 13th of this year. And what is part of the issue is that according to the actuary report that came out from the state in December of 2025, shows that there's a growing fund balance with a surplus at the end of the last year, approximately of 209 million. And by the end of 2035, they expect 429 million surplus. So this is a letdown for employers who just wanted to save some money and pass that on to their employees through better wages and benefits that could help them out. So unfortunately, we didn't win this one, but that is what happened with that bill.
Well, we're going to drill in future webinars the operational implementation of paid family medical leave. As of Friday, we will have the ability to take benefits. Thank you, Amanda. So at this point, there is the ability to share administrative costs, legal costs, but for self-insured plans, you cannot pool risk, which really is the benefit of aggregating different employers together. You know, this is happening so quickly, vote after vote. It is an enormously the scale of public policies that before the legislature is really extraordinary and happening at a time where legislators really are given an up and down vote. And I wanted to turn now to Representative Crockett for a little assessment of what it means to be in the House narrowly divided chamber. And, you know, what are the options going forward for some of these compromises that would actually benefit the business community and ultimately provide predictability? You know, Representative Crockett, we talked extensively about the data privacy bill. You know, where are we right now as a state? And, you know, is there ability to kind of find these compromises that both sides can get half a loaf and also provide predictability for the business community? Representative Crockett.
Yeah, thank you for that, Patrick, and thank you for having me on the webinar today. I'll use the data privacy bill as kind of an example of what the process has been looking like. As everyone on this call knows, that road was pretty rocky, but it really wasn't surprising to me because we've seen that kind of happen repeatedly, particularly over the last 4 years. First and foremost, I want to give a kudos to the business community for turning the tide on that bill when we got down to the inside the 20 or the ninth inning, whatever analogy we want to use. But before we pat our backs too hard, we got a bit lucky on that bill. Because we probably need to start that activism on these bills a little earlier in the process. And I'll share my comments on that why. So about 4 weeks ago, the data privacy bill passed in the House. A bill that was far too stringent, in my opinion, for the business community. One of my biggest disappointments over the last few years is I believe there was plenty of opportunity to vet the bill in a more bipartisan fashion in committee, to carve out what would have been, because the data privacy bill is, I support the idea of a data privacy bill, but this one was a little just too much, too stringent, as I said, with respect to the business community. And I believe there was room there and the ability to carve out a more friendly amendment to that proposal. Unfortunately, this has been the pattern in the legislature, particularly for the last 4 years. And I kind of related due to the majority budget process that we're operating under. Unfortunately, and this is not in all committees, but I think I've seen it play out pretty clearly in a few of the committees, where once the majority has the votes in their pocket, compromise stops. And the discussion kind of goes, we're gonna roll this down the road and roll it through. Amanda just talked about paid family medical leave. When we had the discussion on the amendments to the paid family medical leave, they really didn't get much ear. And that was extremely disappointing to me. And I think all of the business community for sure. That's a huge problem. If that is not addressed in the next legislature and by the next chief executive, the divisiveness and the discourse will only grow. Now let's go back to when the data privacy bill went to the Senate. We actually, kind of sarcastically have to thank the Senate for proposing an amendment that exempted themselves as politicians from this bill. That gave us about 4 days to rally. And you guys did an amazing job of listing over 400 businesses that, were against the bill. And at the end of the day, there was about a half dozen folks on the majority side that agreed with the business community. And that's what enabled the bill to basically die and get killed between the two branches. We really need to work on that. I do believe, the majority budget process just empowers not only the chief executive in a trifecta scenario, but the majority party, where it silences minority opinions. It really rebuffs any hope for compromise, and it creates a work environment in the legislature that is very difficult. I'll stop there. Hopefully I caught the points you were thinking about, and happy to answer any questions.
It is really where compromise is best played out is at the committee room, because that's where you can get into the details. And there have been examples of committees finding those consensus, but that's for some of the more consequential bills. We have not found that compromise at the committee level, and it really goes into a take it or leave it moment for the legislature. I did want to turn now to a little bit of details on this bill. Data privacy, we've heard it in the headlines. Hugely consequential when you think about our own data and how it is shared with third parties. And also it's been foundational for how businesses reach out to customers. And another year where there's no bill that's moved forward. I did want to turn to Ashley Lusky, who's been the front lines of this, our partner, Nate Cloutier with HospitalityMaine, kind of what the outlook is and what really changed this outcome. I'll start with Ashley.
Yeah, thank you, Patrick. Good morning. LD 1822 and data privacy really more broadly has been discussed by the legislature now for about 6 years. I'd say really 4 years specifically, looking at a comprehensive data privacy policy. At a high level, data privacy legislation can provide real benefits to consumers, more transparency, more control over how their personal data is used. Really, the challenge with LD 1822 in particular, and some legislation that was proposed in prior legislative sessions, is just how it tried to achieve those goals, particularly through strict data minimization requirements. And when I say data minimization, I'm really speaking to how businesses can collect and use data, and it really minimizes data to what is reasonably or strictly necessary to provide a certain product or service to a consumer. Maine was looking to pass 1822, which took a much more strict data minimization approach. 17 other states across the country have passed legislation that is more uniform. It's referred to as the consensus framework or Connecticut model often. And really, that legislation provides, or those laws provide consumers with the ability to access their data, provide consent if they do or do not want certain types of their data being used or sold. But it does so in a way that really doesn't minimize so strictly how businesses can collect data. For startups, hospitality, retail in particular, the strict data minimization can have a real impact. We heard from one business, research and development company, who created a personal product company here in Maine, and they spoke just to how impactful digital marketing was to their growth really in the early stages of their company. So these tools are super important for getting a product out before consumers, allowing businesses to grow. And when we completely cut off the data that can be collected and how it flows from one business, maybe a Google, to a small hospitality business, it really impacts their ability to reach new customers. So just, the impact of 1822, had it passed, would have been huge for Maine businesses, Maine's economy, and really our competitiveness with our neighbors in New Hampshire, as well as other New England states like Rhode Island and Connecticut, who have passed that consensus framework. Just speaking to the chamber's position and the broader business community's position, we have been clear from the start that we support strong consumer privacy protections, but again, we need to do so in a way that doesn't make Maine an outlier and that also protects innovation and the ability for businesses to compete here. We actually had legislation submitted this past legislature. So back in the first session of the 132nd legislature, the business community had legislation submitted. There were 3 bills to start out and really 2 of those, I think the business community could have been in support of. We did support those, but really ultimately, it was clear that the majority on the Judiciary Committee that worked so hard to discuss data privacy and come up with a policy really wasn't looking to move on that data minimization piece in particular. Speaking to the advocacy, Representative Crockett mentioned it. We were able to build a huge coalition, which included nearly 400 Maine businesses. We were able to provide real world examples of how businesses currently reach customers and how they would be limited in doing so in the future. Had 1822 passed. And I think, Nate will talk about this more, but I think that direct engagement with legislators, connecting them with actual Maine businesses and keeping this super local, as that's really who's going to be impacted, really helped our efforts in defeating this strict data privacy policy. As far as kind of the outcome and looking ahead, there were multiple attempts to pass 1822 this session. We saw an amendment come forward in the Senate, like Representative Crockett mentioned, that would have exempted political organizations and campaigns. I think that spoke to the flaws of this policy. And we saw some other amendments come forward in the House, ultimately trying to create some additional carve-outs. But really, whether it's carve-outs or not for certain types of business, really how that data is initially collected and how it can be used impacts everybody, whether it's political organizations or small businesses or large businesses. They will all be impacted. So as we look ahead, we will definitely continue to advocate for a more balanced policy that allows Maine businesses to compete with businesses that offer similar services and products in other states. Do want to turn it over to my good friend Nate Cloutier, who's the Director of Government Affairs at HospitalityMaine, also does a lot of work for the Maine Tourism Association. And Nate did a tremendous amount of work in the off session, really leading up to the second regular session, meeting with legislators, connecting them with businesses, and can just provide a bit more detail on why early advocacy is so important and why when businesses come together in the way they did with 1822, it can make a real impact. So turn it over to Nate.
Thanks, Ashley. I'll be brief because I know we're running up against the clock. Absolute pleasure to work with you and the chamber and the retailers and the greater business community on this. This was a great feat. Something to keep in mind with looking at the outlook is that we're heading into a pretty significant reset. I believe it's around 13 in the Senate and 56 or 57 in the House members who will be termed out or retiring. So that works out to be about 37% of each chamber. So that's a lot of new legislators who are coming in and haven't been a part of this conversation yet. As Ashley was saying, that's where a lot of this work is going to have to happen. We had conversations back home in folks' districts, sitting down with them one-on-one, hearing what they were trying to sort through, and then connecting them with the businesses in their own communities. Because Ashley was right that when they see how this affects a restaurant trying to bring in customers or a hotel trying to fill rooms, it does start to click with in a different way. There's an important part to this is that the proponents of this legislation aren't going to slow down. There's a pretty clear strategy to make Maine an outlier on data privacy. The idea is if something like this passes here, it's easier to carry it to other New England states and beyond, because Maine tends to get looked at as this starting point domino effect for these kind of policies. What really stood out and we need to keep in place was just how the business community approached this. This was unprecedented. We had, nearly 400 businesses working as a team who saw themselves as not just individual businesses having to stick their necks out there and risking their own reputation. And that made a difference in a bipartisan way with legislators on both sides of the aisle. We're going into 2026 here. Primaries are in June. We have general election in November. We are going to have a new governor. Every legislative seat is going to be up for either re-election or a new candidate. So it's important to invite the candidates in for a cup of coffee to your business. Walk them through how your business operates, how you reach customers, what would change if this type of policy would get restricted. Doing this groundwork early is going to be key. I don't think the foot is off the gas from the proponents on this. And this type of strategy and advocacy and cohesion between the business community can be replicated with other policies in a successful way next session if we keep up this momentum. So just again, kudos to you, Ashley, Curtis Picard, the Portland Chamber, everybody and all of the different associations, did a great job really bringing this home for folks. So appreciate the opportunity here today.
Well, thank you, Nate. It was a true collaboration that we were in one of those situations. The the sum of the parts were greater than the individual components, and we really worked seamlessly together on this issue. I did want to turn lastly to what we hear constantly from the business community, and that's the pressure on healthcare costs. And this is something we've seen annual increases, high uh, annual growth, 10, 15%. And what is the outlook for really trying to get in control of healthcare costs? Trevor, who's president and CEO of the Healthcare Purchaser Alliance, is with us to try to capture so many hearings, so many work sessions on healthcare. Trevor, can you give us an overview of what the landscape is in public policy discussions and an outlook on healthcare?
Yeah, absolutely. Thanks, Patrick. I'll try to be really quick here. I think the dominant theme is affordability in the legislature. It seems that a lot of policymakers are really looking for ways to address the affordability issues confronting Maine consumers and businesses. As you noted, the small business increases in 2026 averaged about 17.5%. Individual premium increases were about 24% for 2026. So we have this kind of split screen where on one side, the legislature continues to try to pass coverage mandates, which we know increase costs to businesses and consumers in the form of higher premiums, copays, deductibles. And on the other side, they're looking for some larger structural changes to how we pay for and deliver care in the state of Maine. So luckily, a lot of the mandates were not successful this past year. There were two that passed. One is a PFAS testing mandate when a doctor recommends it. It's a pretty relatively small premium impact. The other really just updated guidelines for prostate cancer screening, really mostly around the age at which people are eligible for those screenings. On the mandate side, I think the thing that gave us the most concern was LD 784, which originally was a mandate to cover certain screenings for first responders that you may have in your workforce. And a lot of businesses don't even know if their employees are first responders, for one thing, so it's tough to comply with. But it had a very large fiscal note, over $1 million. So they ultimately amended it to create a rebuttable presumption, which basically puts the onus on the plan to prove that they exercised care in making that decision. So it does create some really significant risk for employers who are not covering these screenings for first responders. So we expect to see a number of employers basically treat that as a mandate and cover that service. But the big concern is really that it creates a precedent for the legislature where they get big fiscal notes out of these mandate bills to instead make it a rebuttable presumption and in a lot of cases accomplish the same sort of mandate. The big bill that everyone was paying attention to this year, though, that was on hospital prices, LD 2196. It would have capped hospital prices at 200% of Medicare. It would have instituted a growth cap at a Medicare market basket rates for year-over-year cost growth. It had some significant changes to prior auth, loosening prior auth. And it would have created price floors for primary care and behavioral health at 110%. Ultimately, that was scaled back to just be a growth cap for hospital prices. And it was defeated, but I think because affordability has been such a focus, we are likely to see more bills sort of in this vein regulating price and growth next year and in following years. For prior auth specifically, there was a separate prior auth bill that had a very large fiscal note, about $4 million for the state plan. And so that was not successful at getting off the appropriations table. There's only about $8 million to fund table bills this year, and that would have been half of it. But it had a lot of bipartisan support, and we expect to see that come back up again next year. And then finally, kind of a smaller bill, I think less coverage certainly, but the audit bill LD 378, it aimed to close a loophole in an audit bill that passed last year, which actually our organization championed. And this basically gives employers the right to audit their claims for accuracy. So employers starting July 1 can audit 100% of their medical and pharmacy claims on a post-payment basis. They can audit any claim above $100,000 on a prepayment basis, and it removes some restrictions that we see in carrier and PBM contracts related to choice of auditor and how you pay your auditor. So we are finding that in other states where employers are auditing all their claims, they're finding about 2 to 4% total savings on their medical and pharmacy spend. So we think that there's a lot of opportunity here for employers both to be better fiduciaries of their plans and to yield some savings in a way that doesn't touch members.
Well, thank you, Trevor. Really connecting what happens in that committee room for mandates and what that does for all of the costs for healthcare. And furthermore, what happens in other committees to have a pro-growth agenda that adds young workers to the pool that can actually reduce the costs for what we're seeing for pressures on hospitals. We need a pro-growth agenda to address a lot of these challenges. And you heard from Commissioner Duguay at the outset of this webinar, really addressing our challenges, whether that is housing, energy, our healthcare costs, and really seizing opportunities of research and development. I strongly believe that we can, in a similar way that we came together with data privacy, to really create a business community that supports a bipartisan coalition that is focused on economic growth. That really will provide the dividends to the constituents of the legislature. But I do want to thank Representative Ducharme, Representative Crockett. It is a testament of what they did from the hearings to listening to the business community, but it also reflects the whole 132nd legislature. It is a hard time to be in public service, and it's long hours, little pay, and we do appreciate all those who step up for public service. But moreover, we want to support a bipartisan coalition this upcoming legislative cycle, and ultimately the state's economy demands it. I want to thank again our sponsors for making this webinar possible today, and all of our presenters for communicating the complex public policy intricacies that are the outcome of this 132nd legislature. We will be underneath the dome tomorrow for the final day of what we expect to be this legislature. And thank you for support for the Maine business community and the Maine State Chamber of Commerce. Thank you all.